Hello, and welcome to the Cash News Podcast. Informative conversations about all things currency and cash. We'll share insights on the issues affecting the world of cash today, like cash security, payments technology, and the cash supply chain. Your hosts, Tom Meehan and Sean Ferrari, hope to inform industry professionals and support better cash security and management by sharing the latest information on trends, strategies, and technology. This is the Cash News Podcast. Now, here's Tom and Sean.
All right, we're back. Cash News Podcast. We have an episode number today, episode 43. Can you believe we've done this 43 times?
43. That is not to give away my age, but we're approaching one episode per year of my life. Yeah. Maybe in the next couple. It's exciting.
That is exciting. And then we'll have to celebrate at 50 and if we make it to 100 with everything going on. But yeah, and this is going to get aired March 1st. So our producer, Chris, has done what we've not been able to accomplish before, as we know actually when it's going to be aired. Although we're ahead, man. It's Happy Valentine's Day.
It is Valentine's Day. Yeah, I realize I do not have red on. Neither of us do, it appears. So we'll have to spiff it up for tonight if we're doing anything special for the special folks in our lives.
Yep, I don't think I have much red to wear that I could wear here. Maybe I'll borrow your jacket.
My jacket. That's a good point. Yeah. Maybe that's what I should wear tonight. Not that I need it, but yeah.
Yeah. So we're gonna make it a short one because I know we both have to run. So let's start with I guess a quick speed round on digital currency, and that includes a whole bunch of things. And now that
it does,
that's your life.
That is now my life, of digital currencies. Who would have thought? But no, it's exciting. I think, this week, the thing with digital currency is there's always so much going on, and that's why I think we've talked about it as much as we have over the past year or so that we've been doing this, 2 years maybe, that we've been doing these podcasts, right? Is that there's just always something in the news about it. So this week, I think one of the things was seen some news from JP Morgan on putting out their work towards putting out a new deposit token, which is kind of interesting. I mean, it's yet another flavor of a token of digitalized money that's out there. And I think it's, as things kind of, it's not a central bank digital currency because it's going to be issued by a commercial bank. But at the same time, it's not, I guess it's sort of like a stable coin, but it's different in the sense that it's completely commercial bank money backed up by someone's deposits, right? So it's just tokenizing deposits essentially, hence the name deposit token. But it's interesting from the sense of there are some operational efficiencies that I think commercial banks would see from a DLT based or a digital based deposit token in terms of moving funds from one place to the other. So I think it's something that's interesting to explore and how it fits in the ecosystem. And I think we're going to see things like this come up as we continue to innovate and develop certain things, because that's some of the pilots that we're doing at Digital Dollar Project. You can see that there's kind of all these on-ramps and off-ramps and different flavors of things. And it's how do you move money from one to the other, whether it's from deposit token to a stable coin to Bitcoin to fiat regular currency. How do you navigate this web of different options? And that's one of the reasons we think a CBDC could play a use, right? That could be an easier way to kind of navigate on and off and between and all that sort of stuff. But I think things like a deposit token make a whole lot of sense in the world. I think the other interesting piece, though, from a U.S. perspective, is you have all sizes of depository institutions here, right? So deposit tokens might make sense for the big guys because they have the investments and the tech folks that can develop and run these systems. Small and mid-tier banks don't. So it's how do you make sure the banking system, as you move into this digital realm, continues to function for all different sizes of banks, and what types of digital assets make sense for all of them. So there's a lot of unknowns in the space, but it was just interesting to kind of see the news that came out from JP Morgan on their Onyx token.
Yeah, no, I think I consistently, and I know I say it all the time, and I apologize if I sound like a broken record, is it's important. It's so important if you're listening to this podcast too, to understand even at a high level, the differences between the type of digital currencies. And when you talk about the digital dollar program, that, you know, cryptocurrency is not all, first of all, not all created equal. And then when we're talking about these fiat based or just tokenized dollars, they're really all very different. You know, they really are. And I, without the resisting the urge to make a joke, like, there's not a good and a bad. They're for different things. And I think right now in the news, like, you can't avoid seeing, even this morning on Valentine's Day, like the SEC, there was I think a Bloomberg report about the SEC saying that now they're taking the approach of not just regulatory from crypto, but also saying like, hey, if you're a custodian of cryptocurrencies, you need to be regulated differently, which is a different, and I'm not going to get into the specifics today because it's not only do I not have the time, I don't have enough expertise on it, but it's different than being someone that holds, you know, a custodian is very different than loaning. So you have all of these different kind of quasi unregulated things that happen with cryptocurrency. You have a custodian or someone that holds someone else's funds, someone that uses funds to loan. You have all of these different quasi, and while they're similar, you know, someone just possessing a digital wallet is different than someone that, you know, creates loans based on cryptocurrency, or has an investment opportunity for cryptocurrency. And none of them are regulated at this point. None of them are. And that isn't even to talk about, well, how do you just regulate it in general to make sure that people are paying taxes? So I think a lay person that is just reading the journal periodically might think they're all the same, but they're all very, very different. They all have very, very different implications. You know, the SEC's custodial piece is one very specific piece. It's not actually even necessarily tied to regulatory things around compliance on taxation. It's going like, hey, if you're going to hold people's money, there's got to be some sort of regulation around what you can and can't do with it. That's different than regulation on you need to report for taxes. That's different than regulation on what is a lender if they're using cryptocurrency, because even if they're not insured and backed, there are things that have to go into place. So good, very interesting time. I think the crash was unfortunate, but you and I, you know, everybody should have, we're not analysts, we're not experts in this space, and we're cautious with that. We're not giving it advice on investment, but I think you and I said a couple of times, like, you know, anecdotally, like, if you're putting all your money in this, there's a lot of risk. So diversifying that, but I think there is definitely this other piece. The other thing is, I think, and you probably would know more about this, there was a Senate banking committee that was just talking about, you know, again, not even the safeguarding of financial digital assets, which applies to everybody. So now you have the SEC talking about custodial, which is a little bit different, although it sounds exactly the same, a little bit different than what the Senate is saying. So lots of eyes on it, which leads me to my next segue, which causes the concern of privacy, right? Like, if
Sure.
You know, yeah. So you know, I
think, no, I mean, it's crazy, right? I mean, it's like, it's there's the concern of privacy. It's been in the news the past few days, so I'll mention this isn't really privacy, but it's more just speaks to the overall uncertainty that's going on. And to the point about all stable coins kind of not being created equal, and even those that are, it's very complicated to understand. You know, even Paxos has been in the news the past few days with the SEC potential lawsuit looming over their BUSD token. You know, and Paxos was typically seen as a relatively safe backed coin, but apparently maybe not. So it's, you know, it's a very interesting market. And from the uncertainty piece, it's just, you have that happening. You have a lot of layoffs in the tech centers, right? As you mentioned, you've got UFOs in the form of balloons and other things being shot down out of the sky. What that means from a global stability standpoint, none of us really know yet, but there's just uncertainty, right? All over the place, which doesn't bode well for markets just in general.
Which, yeah, and that, I think that's kind of the theme of today, is the uncertainty. And so obviously I do a lot in the risk space. So I have another podcast where we're talking about kind of the intelligence wires and briefings are like, I thought when COVID was happening, it was like a science fiction book, like the things that were being said. And now I'm going like now you're getting like things like objects floating in the sky that are the octagon shaped objects that are floating with no propulsion. And then like, so it's wild. Or like, and then, just because we're having fun, right? We have a fun podcast, like the interesting tactic of the Pentagon doing a briefing during Super Bowl. Like those are just things that literally, like, if you and I were writing a science fiction novel, like, okay, let's do this right in the middle of the Super Bowl during the halftime show. Like it's just timing. In my opinion, it's just everything, you can only do so much. And with crypto, I consistently, specifically with crypto, hear the privacy concerns. Well, the government wants to regulate to see what I'm doing. And forgetting, all of the things that have happened. Like, I really mean that. Like, people are having blinders to the fact that, billions of dollars disappeared, because of the way that there was no regulation. In addition to the stories that we almost forget about, like crypto housing founders mysteriously dying and no one having the keys and all this money being inaccessible. Like, so when you think of all those things and when you think of billions of dollars, you have to kind of logically say, well, we've got to have some sort of oversight, or we just might as well not talk about it because there's no way to manage it. And then when you think about, when you're talking about digital tokens or like the JP Morgan piece, to me, that is kind of the natural progression of currency, right? Like, let's explore what makes sense. But when they all blur together and you add UFOs and Chinese spy balloons and briefings during the Super Bowl, you have a subset of a group of people that manifest, in some cases for good reason, this concern that that someone's watching me.
Yeah.
And
yeah. So we're trying to put some facts and just understanding around that topic, because right now it is a very kind of reactive just discussion of, oh, digital currency means increased surveillance. It's like, okay, well, to some degree, maybe, but let's look at it. So we're having a series of roundtables that the Digital Dollar Project is hosting with universities around the country. The first one's coming up, I guess, a week after folks listen to this. It's coming up on March 8th at MIT. And we've got a lot of different tech folks that are in the CBDC space, that are in the stablecoin space, a lot of the MIT folks and some Harvard folks that are coming over to talk from the academic technology piece and research piece, as well as a few kind of more companies focused on the regulatory side of things, where we're going to delve into, what is the technology of privacy and what is the tech really allowing for when it comes to both privacy and also monitoring in terms of AML, KYC type stuff, and how do the two kind of come together? We're not looking at it from a policy standpoint at the time being. It's more literally, what does technology allow for?
Yeah, so. No, and I maybe one of those I can join. We'll see. I think that's something that I obviously am delicately involved in. And I also would say, from a technical standpoint, some of this is not just a flip of a switch. In order to appropriately protect the information and still make it viable and accessible, you've got this balancing act of it. So I certainly think that crypto specifically, it's a bit of a myth that by design the digital ledger can be tracked. So eventually there's an end of that where you're converting it. I am a firm believer in regulation, you know that, and I'm a firm believer in the privacy pieces put in. I'm also a believer that some of these concerns are because of misinformation and social media and misleading. Modern governments have a lot of things on their plate, and I'm pretty sure that they're not interested what you and I are doing with our finances. And if they were, I'm pretty sure there would probably be a reason for it. So, I mean, and again, those are all opinionated statements. As I said before, we need to jump quick today. I actually have another one. So for everybody listening, tune in. We'll continue this conversation, because I think by the time you hear this, it'll be after that roundtable. And I don't think we'll talk specifically about that roundtable, because usually those are pretty confidential, but I'm sure we're going to talk about everything going on. And Shaun, it's always good to see you.
Yeah, good to see you as well. Have a good evening and good Valentine's Day.
Yeah.
And everybody out there, hope you had a good Valentine's Day a week or two ago when it actually occurred. Yeah, we'll talk to you soon.
Yeah. Thank you. Please like and subscribe.
Thanks for listening to the Cash News Podcast. We hope you found this episode insightful. Don't forget to like and review us on iTunes, Spotify, Stitcher, or wherever you listen to your podcasts. Follow us on LinkedIn and Twitter, and be sure to visit us at thecashnews.com to stay up to date with the latest on the world of cash. Thanks again for listening to the Cash News Podcast.